Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex, gold, and S&P fundamental and technical analysis for the week ahead starting November the 24th. I hope you all had a great trading week. So let's get into the week ahead and some of the fundamentals coming up. So the shortened holiday week in the United States will center on the FOMC meeting minutes, PCE inflation data, personal income and spending figures, the second estimate of Q3 GDP growth, and the Conference Board's Consumer Confidence Index. Additionally, attention will be on durable goods orders, corporate profits, new and pending home sales, and the S&P Case-Shiller Home Price Index. Elsewhere, inflation figures from Australia, Germany, and the euro area. Switzerland and Canada will release their latest GDP growth rates. Germany will publish its unemployment rate, the LFO Business Climate Index, GFK Consumer Confidence, and retail sales data. Lastly, interest rate decisions are expected in New Zealand, while Japan will reveal retail sales, industrial production, unemployment rate, housing starts, and consumer confidence figures. So, lots going on this week. So, let's get into some of the technicals and the past fundamentals, which kind of has shaped the week. And so, starting off as we always do on the equally weighted dollar index. And it's important to really kind of understand what the dollar is doing overall against, the currencies that we do trade. For example, the euro, the pound, the yen, Canadian dollar, Australian dollar, New Zealand dollar, and the Swiss franc. And this is different from the usual DXY or USDX. And if you want to know why I use the equally weighted calculation of the dollar index, I'll put the link up in the top right hand side. And so, looking at the equally weighted dollar index, really fundamentally, um, really should be, I think, still long, still bullish on the dollar. Yes, they are cutting rates, but the amount of rates are actually being rate cuts being reduced. And so, if we go to the private members Discord area and go to the United States channel, and I guess look at some of the latest data and analysis. And what we see here, in fact, let me just zoom in a bit, right? It says here that the 2 year US Treasury bond yield jumped 8 basis points and was up, 12 basis points yesterday from the intraday low in response to the speech last night from Fed Chair Powell that pointed to a possible, earlier indication of an intention of the FOMC to pause its easing cycle. So, um, yeah, any reduction or expectation of a reduction in interest rate cuts is going to support a currency, or should do anyway. And Powell was very clear with his message that the economy is not sending any signals that we need to be in a hurry to lower rates, adding that the strength of the economy means the Fed has the ability to approach our decisions carefully. The decision to cut, even in December, is now more finely balanced, and the OIS market is now pricing a little less than a 50% probability of a cut at that meeting. And so when we look at the Fed Watch tool, when we look at 18th of December, pretty much the chances of a ease is basically 52% and the no change is 47%. So pretty much 50-50, right? It's pretty much a coin flip now. And that's really because of the supporting data, rising inflation, the fact that the economy is doing actually better, and so the need for rate cuts from the Fed is being reduced. Therefore, we're seeing prices move to the upside. And whether that's the Trump effect, or what the Democrats have done, who knows? But ultimately, the data is supporting the narrative that although there may be cuts coming, next month, overall, when we look at the overall, for 2025, in comparison to maybe about a month or two ago, the number of cuts and the amount of cuts has definitely been reduced, which is helping to push the dollar higher. So for me, really, the dollar should be buys on pullbacks. Did get a pullback into a level of resistance here on the dollar index, which helped. Technically, buyers were definitely looking to buy there. There wasn't really a demand zone, but now there is. There's definitely demand there. So if prices do pull back into this area, that's where I will be looking at as for confluence to look to buy the dollar against some other currency pairs. Looking at the dollar yen. Now, the dollar yen, I do think that the dollar yen should make some more upside moves in the over the medium term. Um, Main reason being is because I do think that the dollar, in terms of its interest rate differential between the Bank of Japan and the yen, I think is too much of a gap in order for investors to really kind of be concerned about going into the yen and coming out of the dollar, right? I think if the dollar and the Fed were looking to cut aggressively, then I'd likely be short on this. But I think I'm waiting for more of a pullback when it comes to the dollar yen. But it doesn't mean I'm not necessarily buying the yen, just not against the dollar. I do want to be a buyer of the yen against something like the euro or the Swiss franc. But I think a dollar yen short for me. I think that the dollar actually still has the advantage, um, even though the dollar is and the Fed are on their rate cutting cycle, but I just don't think they're going to cut enough to make a major difference in terms of yields. So I do think any pullbacks should be buying opportunities if you're looking for a buy. If you agree with me, if you don't agree and you want to be a seller, then of course you can look for supply zones. There's a daily supply zones. If you do see prices come up into this zone, the 156, 157 areas, that would be a decent area to look for a sell trade. Also, there is a kind of like a line in the sand when it comes to what the Bank of Japan will tolerate when it comes to the weakness of their yen. And 160, around the 160, 161s is seen as kind of the line in the sand where you may have some intervention. I speak about it in last week's, and I go over it in last week's video in a bit more detail, so you can have a watch of last week's video where I go into that. But yeah, if you're looking for short trades, then you're looking at any of these supply zones, and hopefully you kind of you're in that trade, and the Bank of Japan do intervene. But even if they intervene, I don't think even the downside is going to be that much in terms of I don't think it's going to necessarily go down to the 140s anymore. I do think that it might come down to the 152s, maybe the 148s from the 160s, which would represent somewhere like about 1,000 pip move, which might seem a lot, but when we're looking for pullbacks, the better the pullback or the deeper the pullback, the better when you're looking for bargains, right? So any pullbacks into these zones, I think after there is a possible intervention would be a buy. And looking at the yen channel, it says here the Bank of Japan governor Kazuo Ueda gave the clearest hint yet that the central bank's next monetary policy meeting will involve a live discussion over whether to raise interest rates. It's impossible to predict the outcome of the meeting at this point, Ueda said in response to questions at a Euro Place forum in Tokyo on Thursday. The next meeting is December, but there is still a month to go. The vast amount of data and information will become available between now and then. With the remark, Ueda avoided boxing himself into a December rate hike while leaving his options open. He has repeatedly said that rate decisions will be made at each meeting and not in advance. Still, the remarks highlight the chance of a rate hike in 4 weeks as expected by around half of economists polled last month. More than 80% of surveyed Bank of Japan watchers expect a move in January. So it looks like a 20%, maybe a 20% chance in December still, but January still looks like the rate hike. So I think for now, the yen, you can still buy the yen. I just personally wouldn't necessarily do it against the dollar. Of course, you can if you do want to, but I think the dollar's got the edge on the yen for now. Looking at the dollar Swiss and the dollar Swiss. So yeah, there was an opportunity to get involved in this pullback. Ended up missing this actually. This was a nice, decent pullback. Could have got involved in that this week. And if you did miss it, like myself, then basically you're just waiting for a pullback into that demand zone before looking at going long, or you're looking at going long here. Reason being, fundamentally, the Swiss franc and the Swiss National Bank are still looking to cut rates. Pretty bit more than the Fed are. Also, as well, they're suffering from deflation, so they actually want a cheaper currency, which means, in fact, if they need a cheaper currency, then the dollar Swiss should move to the upside, right? It just depends on how it's going to get there. So let's see what happens on the dollar Swiss. Dollar CAD, again, the path of these resistance should still be to the upside. The CAD actually had some decent news this week, where I think it was inflation came in higher than expected. So the market was pricing in, or pricing, I should say, pricing out the aggressive 50-point basis cuts. That the market was expecting, because inflation came in higher. But again, in a straight fight out of the two, I do think that the dollar, the US dollar, should really be more of the buy. So any pullbacks into that demand zone, I think, is a decent area to look for a sell trade. If you do want to do the opposite and look for sell trades, then you're looking at a move back up into this supply zone before looking at going short. The pound dollar. So the pound, interestingly enough, had some decent news, which really should have strengthened the pound. Maybe not against the dollar, but against some other currencies, but it didn't. So I think one of the reasons why, and again explaining this in the private members group, was due to the fact that the market had already kind of priced in the fact that the Bank of England weren't looking to cut rates in December. And so the data that came out this week basically just confirmed that. So inflation data came out higher than expected. So there was no really repricing of the of rate expectations, unlike, for example, the Canadian dollar, where there was a 50 basis point cut expected, but because of the data, they basically reduced that to now 25 basis points. So that should have supported the Canadian dollar, but with the pound, it didn't really support the pound. And so, but I do think the pound really is a buy. And again, I don't think it's a buy really against the dollar per se. I think if the Fed do manage to cut, then of course I think we definitely get some sort of, what we say definitely, but we should get some move to the upside. But that's only if the Fed do cut. And even if they don't cut, markets don't move in just one direction for too long. There should be some sort of pullback, but I think the path of these resistance will be to the downside if the Fed do not cut. If they do cut, then maybe we start to see prices maybe enter into some sort of range, or an auction as we know it, and then maybe back up to the upside. But I think the pound would be more of a buy against other currencies, just not against the pound. And when we go to the UK, again, inflation accelerated more than forecast to well above the 2% target, a pickup that keeps Bank of England officials on track for gradual rate cuts, right? Exactly what is happening really in the United States, and what Powell was talking about. The less need to kind of cut rates. And it says here, services inflation, which is being monitored closely by the Bank of England for signs of domestic pressures, remained elevated at 5%, in line with the Bank of England forecast and up from 4.9% in September. The figures keep the Bank of England on course for a cautious approach to reversing the 14 back-to-back interest rate hikes amid growing inflationary threats at home and abroad. So I think the UK is still a bit more of a buy. There are some, economic concerns with regards to the new government's policies, but I do think that the pound, although not the best currency to buy, is definitely not the worst. Currencies and like the euro and the Swiss franc and the New Zealand dollar are definitely worse than the British pound. So the pound for me is a buy against more of those currencies, just not against the pound dollar, in my opinion, right now. Pound yen, again, the pound kind of uh, weakening this week, and really again some kind of hawkish news out of the Bank of Japan with regards to possible rate hikes has pushed the price of the pound yen to the downside this week. So if you are looking to be a buyer of the pound yen, then you're really looking for a pullback into maybe one of these levels before looking at going long. It's not really a pair that I'm interested in, though. But if you are looking to buy, then you're looking at one of these zones, this area here, the 192 or the 190 on the daily. If you're looking at supply and looking to buy the yen, then you're looking for a pullback, probably back into this supply zone before looking at going short. The euro. So looking at the euro index, and the euro index at the moment is an equally weighted index, basically making new lows. And if you've never heard me say this before, you'll hear me saying it for the first time, but there's no technical level, no demand zone, there's no supply zone, there's no support or resistance, no Elliott wave, nothing, no um any strategy you kind of put out there that's going to stand in the way of fundamentals, right? When the fundamentals are strong, then it's really all about value and what the market values. The market is valuing that the euro should be a lot lower overall, right? This is the reason why it's taken out a lot of these technical areas, and so that's why it's important to get the direction right. And again, I've been saying this for weeks, if not maybe a month or two, that the euro is likely to be a sell, and of course that kind of accelerated with Donald Trump being elected president. Around November. And so if you go back to, those videos, you'll hear me start to say that, yeah, the dollar should really be, the euro dollar should be really a sell. And we've seen that pretty much play out, in the euro weakening against pretty much, the dollar, the pound, the yen, the CAD, the Australian dollar, Swiss franc, and the New Zealand dollar. So for me, I think that trend is likely to continue. So any pullbacks on the euro index are likely selling opportunities. Going to the euro channel, and it says here the contraction in Germany's private sector activity worsened in November, dealing another blow to an economy that is now grappling with a government collapse alongside flatlining growth. So you can see really the contrast in difference when you read about the US dollar and the fact that they are looking to avoid any kind of recession now, well, for now anyway. Um and and you've got Germany, which is Europe's biggest economy, looking like it's contracting, government instability. Why would you really want to buy the euro? The money's flooding into the dollar and other currencies, right? It says here these figures are bad news. Cyrus de la Rubia, an economist at Hamburg Commercial Bank, said in a statement. Until recently, the German economy was stabilized somewhat by the services sector, which was making up for the steep decline in manufacturing. Not anymore. So you're seeing private sector activity contracted in November, expansion, contraction, right? German composite PMIs, manufacturing and services all heading, all at below 50. Europe's biggest economy has long been suffering amid dwindling foreign demand for industrial goods and cars, as well as the jump in energy prices that followed Russia's invasion of Ukraine. Strict borrowing limits, what meanwhile were restraining government spending even before the ruling alliance fell apart. While Germany recently dodged a recession, the Bundesbank said this week that output would probably stagnate this quarter. The country is on track for a second straight full year of contraction. And PMIs are closely watched by markets as they arrive early in the month and are good at revealing trends and turning points in an economy. So when you start to see, PMIs contract, manufacturing contract, and now services going below 50 in the contraction phase, it doesn't look good for the euro. It doesn't mean that prices can't go higher, right? Can't pull back from here, but ultimately, I would say any, pullback should really be sells on the euro until data, um, you know, uh, supports any kind of buying. So looking at the euro dollar now, the euro dollar again, we're just seeing that massive drop right into the 103s now, 103.30s. And I think last week or the week before, I did go over some analysis that the banks were pretty much calling parity. They were saying that prices could come down to the 1 to 1, €1 to $1 area, and it does look like that is happening, right? And so again, there's no technical level that's going to stand in the way of any kind of strong fundamentals, because prices pretty much in the short term are moved by liquidity, but in the overall medium to long term, it's really about the fundamentals, and value. So even though we've kind of hit this demand zone at the 103.50s, and we could bounce from here, right? Nothing to say that we couldn't bounce from here, but I think again the path of these resistance is still to the downside. So any pullbacks into the 105, 105.50s, I think are going to be very nice for a short trade. Euro yen, pretty much similar price action happening in terms of euro sells against the yen, and especially now that the Bank of Japan are slightly more hawkish, right? So we've got that now as an area to look for a pullback to um, try and get short on this. I think out of the two, the Bank of Japan hiking rates, the euro, though their interest rate is a lot higher, I just think that they're going to be cutting a lot more. I do think any pullbacks into that area is going to be a decent sell. Euro pound, again, I was waiting for prices to kind of come up a bit more into this zone here, but it just didn't come up into the zone, the 83, 84s. If it would have come up into here, I would have been definitely a seller in that zone, but didn't quite get that pullback. But no matter, because then we've created another supply zone right here. So if prices do come back up into this area, then I will look for a sell, right? That's basically what I'm looking for. Got to be a bit more patient with this trade, but yeah, the UK, the economy, and the Bank of England, cutting rates next year, whereas it's pretty much a foregone conclusion that the euro is going to be cutting rates in December. Really, you want to be short, I think, is again the continued path of least resistance. The Australian dollar, US dollar. See, the Australian dollar is again is one of the stronger currencies, as again the RBA, their central bank, are less likely to cut rates. I think they're looking to cut rates for the first time next year, but against the dollar, it doesn't look great because maybe the slight risk off element, as well as and the risk off element really kind of being driven by the future potential trade tariff situation with China, and that affects Australia, because if China, are affected by, the tariff wars that Trump may start, then that hurts, and could hurt or is likely to hurt the Australian economy. So yeah, I do think it's not really a pair that I would really look to trade, um, especially as the it looks like it's 50-50 when it comes to a rate cut by the Fed. I think if the Fed cut rates, there should be we should see prices maybe move up to the upside, and prices may remain within this 0.67 to 0.64 40 area. But if they don't cut rates next month, where it's looking less likely, then we could see, in fact, a bit more of a drop as the market has to kind of price out any of those expected rate cuts. So, so yeah, let's see what happens. I think this is really going to be driven by what happens with the Fed. Looking at gold, and gold did bounce off of here. From this demand zone from last week. I was a bit surprised by this, to be fair, because for one, when we go to the VIX, right, the volatility index, we've kind of remained below 20. Now 20 is kind of seen as a bit of a line in the sand when it comes to risk on and risk off. So doesn't mean that, because you're at 19.999 that you're in risk on, and that if you're in 20 or 20.01 that you're going to be in risk off. It's more of like a scale. So the closer you get towards 20 is the more you're kind of rising towards a risk off environment, and then the higher you go is the severity of that risk off sentiment, right? So in August, right, we had this massive spike up. I don't know if anyone remembers this, or you should do if you were trading around that time. But this was really kind of due to fears of the stock market crashing, right? Stock market crash, meaning that there was fears of a recession really in the US, and also as well that the Bank of Japan were looking, well, they had basically intervened in that time as well. So if we go to, I think it would be the stock market channel. I think I had it lined up here. Yep. So the 6th of August, right? So this was the 6th of August. And if you go to the chart, right, that right there was basically the 5th of August, right? Monday the 5th. And so the news came out on the 6th of August. And what it was saying was that a semblance of calm returned to the markets as investors looked for bargains after Monday's dramatic sell-off that capped a 3-week 6.4 trillion retreat in equities globally, and bonds fell. It says here, traders are catching their breath following a day in which almost every risk asset, meaning, some things like the stock market equities, was sold amid growing concern about a US recession and extreme valuations in the technology sector, while a surging yen sparked an unwind of carry trades. Fears of an abrupt downturn was somewhat allayed by by data Monday showing the US services sector expanded in July. So there were massive fears going on, right? So a lot of risk off sentiment. Now, going back to gold, right? Going back to gold, with the VIX being kind of remaining below that 20, I didn't think gold would have really kind of pushed that high. Plus, you had, a bit more of a strengthening dollar as well. So gold kind of pushing all the way up to these extremes. I mean, you can always get a pullback in a downtrend, right? And then the same thing in an uptrend. When you have an uptrend, you get pullbacks. The price doesn't necessarily always move to the downside, but I was surprised by the actual move and the amount and the fact that it moved so much in a week. And going to gold and silver. It says here that gold headed for its biggest weekly gain since October last year as an escalation in Russia-Ukraine conflict boosted its haven appeal, with traders also assessing prospects for further easing by the Federal Reserve. So a bit of a strange one, because like I said, that's normally reflected in the VIX, any kind of risk off sentiment, but we didn't get any VIX or volatility. But yet gold still managed to rally while the VIX remained below its 20. So again, bit unexpected, but of course these things can happen. So it says bullion rose after Ukraine and Russia launched a new kind of ballistic missile at the city of Dnipro in an alarming signal to Kiev. Western backers heightened geopolitical tensions tend to drive investors to safety assets such as gold. So, um, yeah, I guess if there's a de-escalation in the in potential World War III, of course, we could get again a sell-off in gold. At the moment, it's a bit of a difficult one to kind of predict, but of course that's the reason why you manage your risk, and we're not necessarily trying to predict really anything. It's just a case of hoping that prices go in your favor. But in terms of your options, you can look for a sell now or maybe a sell slightly higher. Of course, if we still got get escalations in what in Ukraine and Russia, then again I would really kind of expect prices to move to the upside. Um, but if we get a de-escalation, then we should move to the downside. So any news, that is seen as possibly escalating. I don't know whether prices will come all the way down to the 256 areas. So what you'd have to do is wait for maybe a pullback, a bearish daily candle, and then if it pulls, it makes a higher high, then you're looking for a move, back into that demand zone, which would be the higher low here, and then you wait for a move to or some entry to the upside, something like this. But yeah, if you're concerned with risk off sentiment, then gold is definitely a buy. And the S&P. So again, another correlation is that when there's fear in the market, what typically happens is that the stock market tends to sell off, right? But the stock market didn't sell off. Gold went higher. The VIX remained below 20. So yeah, definitely some different narratives going on to what usually would be intermarket analysis, where you have investors kind of going into and out of different assets, but you have risk and risk on assets still making higher highs, or I would say higher highs, but at least bouncing off of that area of support. Right, you have gold going higher and you have the dollar going higher. So yeah, like I said, these things do happen. But if you are looking for a buy trade now, I think that's now the opportunity to look for a buy. So that is a what's known as a hidden demand right there, bit of an outside engulfing candle. So for me, any pullbacks now into this area, especially this 5680 area, I think is going to be a very nice area to look for a buy trade. If not, then basically a pullback down into the 5 to 70s. So either one of these for me would be a buy trade, as long as the narrative is that the US is going to avoid a recession. Um, and I think rate cuts being taken off the table should still continue to drive the S&P higher. um but let's see. But I think my the path of least resistance, I think, is probably more to the upside rather than the downside. But let's see if risk off does start to affect the stock market. Then of course this area here is not really going to be a buy. I'd wait for any kind of deeper area down into the 5 7 20s, even down to the 5 6 40s. So getting into the trade updates. So trade update for the Aussie CAD. So I'm still in this trade, been in it for a couple of weeks now, and I thought I'd been stopped out. I was saying to the guys in the group that I thought this had stopped me out, but on my broker it didn't. So I came very, very close. If you want to get a breakdown of this trade, I've gone over it last week and the week before, but my stop loss was actually at 0.9067, and even though price came very, very close, it didn't stop me out. So I'm still in this trade. Hopefully the with the Canadian dollar cutting rates. Hopefully next month we could see, prices move to the upside. Hopefully like this, but who knows? It could just to make higher highs, higher lows. Now the pound CAD was a bit of a disappointing trade. Entered into four positions, won one, lost three, and again, this was really kind of due to the data that kind of came out that was more favorable for the Canadian dollar, and not really for the British pound. So my entry was here at the 1.7805s. And then what I did was I entered into pending orders as it pulled back. So at 1.7767, then another one at 17733, then the final one was at 17703. And when the data came out with regards to the inflation data year on year that was higher, that caused the market to really kind of price out the 50 basis points um, for the Canadian dollar, right? So the market was kind of pricing in 50 basis points. Higher inflation meant, in fact, it was probably less likely that they were going to cut aggressively and weaken the CAD. So 25 basis points was to be priced in, and 50 basis points, priced out of the market, which is actually it should appreciate a currency because, of course, you're cutting less. Cutting means, the more aggressively you cut, should be the weaker a currency goes. And if it's, if they were pricing in 50 basis points, but now it's going to be 25 basis points, then a pricing out 50 basis points actually means the currency appreciates a bit. So that's basically what had happened during this period here. So on the 19th. So, you see the bearish candle. But then we also had the inflation rate for the pound, right? So pound, my stop loss was here. So that luckily it didn't necessarily stop me out. And when I saw that the inflation rate was stronger for or came higher than the actual forecast, the initial move to the upside was as expected, right? Got this nice move to the upside on the hourly candle. But then obviously prices ended up stopping out three of the positions. So as I was in this position here, right, with a stop loss there, I hit a 1-to-1 there because the aim, really, the goal is to try to get to at least a break-even position, depending on how many positions you're in, and then with the remaining positions, then you want to swing trade those. So if I were to hit a 1-to-1 on that position, which I did, right? So that was the 1-to-1 right there, right at the top, kind of spiked up and hit a 1-to-1 there. Zooming in right there. And if I would have hit another 1-to-1, for example, on this one, if prices came up and went up to here on that position, would have went up here, hit a 1-to-1, then I would have been in two positions, meaning this one, and then I would have basically just held these two positions to see if they could move to the upside, right? But unfortunately, it didn't do that. And again, going back to one of the reasons why, or the main reason why, is because the Bank of England are not expected to cut in December, right? They're not expected to cut in December. And so the data didn't really do anything for the expectation of rate cuts for December, right? Because they already were still looking at cutting in, I think it's February, right? So the likelihood is that they were cutting in February. And so the expectation, I think right now, I think it's somewhere at maybe about 66 basis points for 2025 cuts. That didn't move at all. So the expectation for any kind of rate, the rate being either hiked or cut, didn't move. Whereas for the Canadian dollar, it did. So you had more of a pricing out of cuts, but you had the cuts maintained for the Bank of England and the pound, and so the CAD ended up appreciating, even though you had decent news for the pound. But for me, Now I'm just looking for another buy, right? We have to look for another buy somewhere around this area here, as I do think that with the Canadian dollar kind of pricing, or the market pricing out that 25 basis point uh, cut, in terms of, with the 50 basis point cut. I think now the market should find at least some sort of bottom around here. Of course, it will depend upon what happens with the data, and whether the data convinces the market that in fact the Bank of Canada may not cut at all, maybe this year, or cut less in 2025. Because if the data does convince the market that there's going to be less cuts for the Canadian dollar, then in fact we could continue to go lower. At the end of the day, nobody knows, right? None of us know. This is the reason why we manage our risk. If we knew what was going to happen, if I knew what was going to happen, I'd bet every single penny I had on a trade, but we don't. So we have to just manage our risk, and the fundamentals are playing out. Matter of fact, some people might say, "Oh, the fundamentals are not playing out." Well, they are, because as I've just explained, it's really about interest rates and the differences, and what pricing in and pricing out means on currencies. So yes, the fundamentals are playing out, but just not in the direction that I actually wanted it to go. Right. So we just manage the risk. This is why we take some losses. But when you go for more than you risk, eventually, the account should continue to move higher. So yeah, three losses, right? One win. It doesn't really matter too much. Now I'll just try and enter in and around here if the market gives me the opportunity to. If it does, brilliant. If it doesn't, then I'll just wait for an opportunity, as long as, again, the fundamentals say that the pound should be more of a buy over the Canadian dollar. All right, guys, hope that helps. Take care. Hope you have a great trading week, and I'll see you all next weekend.